Hello everyone. As we know that if the foundation of a building is not strong, then the building will collapse. Something similar happened when Hindenburg wrote a report on Adani Group. As a result of this report, the stocks of 7 listed Adani companies have fallen almost 40 to 50%. Adani Group called this a calculated attack on India, as all has been proven in court. We have compiled information on both the sides on this controversy. So, in our today's video, we will understand, is Adani really the biggest corporate con, or is it a conspiracy against Adani? On 24th January, when the Natu Natu song was nominating for Oscar and filling ourselves with pride, at the same time, a report by Hindenburg attacked Adani's reputation. A company who have only 5 employees caused a loss of rupees 8 lakh crores. As well as the banks had a steep decline in their stock prices, who had been giving loans to Adani. While Gautam Adani slipped in the richest list from 3rd to 17th at the time of making the video. The face behind this controversy is Hindenburg, a short seller research company. The headline of the research report was, How the World's Richest Man is Pulling the Largest Con in Corporate History. To understand these things, first we need to understand what is short selling. Usually you make the profits on a stock when its price goes up.
ये है आम जिंदगी.
But in the case of short selling, you make the profits on a stock when its price goes down.
ये है मेंटोस जिंदगी.
Now, let us see the history. In 1934, Hindenburg was among the largest airships in the world. It was like Titanic in the sky, and everyone was thinking that it would be the future of air travel. However, an unfortunate disaster on the airship caused many fatalities. And in just 40 seconds, the Hindenburg airship became a meager part of the aviation history. After 80 years of this disaster, in 2017, Nathan Anderson founded Hindenburg Research to find fishy companies. The Hindenburg Research released reports after thorough analysis and put the Hindenburg effect on the stocks of that company. One thing to clarify is that Hindenburg does this for their own profits. Like with a company called Nikola, Hindenburg claimed wrongful activities on part of company's founder, including fraud and manipulation. After this report, the share price of Nikola fell from $65 to $2.5. By short selling, Hindenburg Research made quite a lot of money, and this is what they do. However, in the US, they are not termed anti-national or anything. In fact, they are held in high regard. Now, let us go through the Hindenburg report against Adani. The list of allegations are long, but let us go through some headlines to make up our minds. This research, which lasted for about 2 years, has claimed that a meteoric of $100 billion rise in stock price of listed Adani companies in 3 years, and that amounts to an average hike of 820%. The Sensex as an index grew 50% in that same time. Then, what exceptional did Adani companies do in the pandemic that skyrocketed their growth? The second allegation was that 8 out of 22 key members in Adani Group are family members.
नेपोटिज्म ये क्या हो रहा है हमारे देश में?
The problem is not nepotism. Hindenburg Research has said that the family is controlling the stocks from different entities. Allegation number 3, whereas 4 investigations are ongoing for money laundering on Adani Group, and on top of that, Hindenburg report is including the fact that Adani is establishing shell companies in Mauritius, UAE and Cayman Island to show false import and export bills. Allegation number 4, the younger brother of Gautam Adani named Rajesh Adani was involved and arrested in a diamond trading fraud by Directorate of Revenue Intelligence in 2004-05, and now he is the managing director of Adani Group. Allegation number 5, Hindenburg identified 38 shell companies with no business setup or operations in Mauritius, and these companies are controlled by the elder brother of Gautam Adani named Vinod Adani. The most interesting fact about these companies are that these companies are investing billions of dollars in Adani Group. Hindenburg said that it is a violation of investing policies, whereas Adani Group says those are independent companies. Then Hindenburg asked, where did investment money come from? Allegation number 6. As of 2007, SEBI stated that charges against Adani in manipulating stocks of Adani Group with Ketan Parakh. Adani says this matter was solved in court. Allegation number 7. Adani's 60 companies have 600 subsidiaries, are audited by a tiny independent auditor firm called Shah Dhandaria. You can get an idea of how small this audit company is, that even it has no website and it has only 4 partners and 11 employees. An auditor checks for accounting frauds, but in this case, the auditor itself is questionable as there are no proper details. In response to this, Adani said that the auditors may be young, but they are more than qualified. Allegation number 8. Adani group of companies are heavily leveraged and they placed their company shares to get more debt. This allegation clarifies that the Adani companies have been building on loans. The prices of the shares were increased by taking loans and then again a loan on the higher value shares. This is simply called debt-fueled growth, in which liabilities are more than assets. The present loans of Adani Group is rupees 2 lakh crores, whereas rupees 80,000 crores from Indian banks. This is the reason why the fall of Adani Group can also cause a dent on banking sector. Adani said that their profitable businesses are ensuring that debt burden is reduced. The main allegation is of stock manipulation. Stock price is automatically dependent on demand and supply. That means when a demand of a stock is more than supply, then the prices will increase and vice versa. What if the supply is in your fist? If you look closely, then you observe that the free float of shares of Adani Group in the market is very less, as over 73% is with the promoters and the maximum permissible limit is 75%. Remaining 27% is okay, but what if you take away another 15%? Hindenburg says that from Mauritius and Cayman Island, this is being controlled indirectly by the family. Now the free float of shares in the market is 12% and big investors like LIC and other mutual funds are invested in much of remaining 12%. Then for regular traders, 3 to 5% shares are available. Now, if the supply becomes so less, then the price will touch the sky. For comparison, Yes Bank has 4 crore shares in open market, whereas Adani has only 4 lakh shares. This is why there may not be a total collapse on Adani shares, as shares are limited, because neither SBI nor LIC will sell, and the majority part has been controlled by Adani family. This can work as a damage control. Adani Group has said that the report is bogus and they are planning for legal action on Hindenburg. They also add that Hindenburg is a short-selling company and Hindenburg released that report to bring Adani's shares down. If we discard the Hindenburg report or if we throw their claims into dustbin, then still Adani has to answer some key questions. First, what is the relationship between LIC and Adani? LIC is practically run by government and 98% of investment into Adani from insurance sector is from LIC. From September 2020 to till now, LIC has manifolded their investment 10 times in Adani Group from Rs 7,300 crores to Rs 72,000 crores, whereas mutual fund industry largely stays away from Adani Group because of overvaluation. Then why is LIC investing in Adani Group and what is the source of their confidence? Now let us come to conspiracy. If it is so, then why has Hindenburg not gone after Tata, Birla, Infosys or Wipro? These companies also created wealth for so many investors. Then why is everyone after Adani? Second, has nothing changed since 1992? Is stock manipulation still easy? Harshad Mehta 1992, Ketan Parak 2008 and Satyam Computers 2010. What was SEBI and RBI doing? How will banks recover money if it defaults? At the end, a huge question is that what about the common retail investors? Adani Enterprises is listed on NSE and BSE in good books of government, handle huge projects. Promoter was third richest person in the world. So, is that not enough to trust the company? If these kinds of companies have managed to deceive everyone, then how can retail investors ever trust another company? After all this, SEBI said that they will look into the Hindenburg report. If the Adani will default the bank loans, then at the end of it, the common man has to pay that amount as low balance charges on account and so on. In response to Hindenburg report, Adani Group wrote that Hindenburg cannot understand Indian markets. Building subsidiaries is a common practice to handle huge projects, but market is not believing on Adani's 413 pages report. We are hoping that the Adani Group to accept the mistakes and be more transparent. We need 100 more Adanis to build our nation strong, but in a legal, transparent and non-manipulative manner. Thank you so much for giving us your valuable time and watching our video till the end.